Hello to you this Friday morning. My name is Ayodele-Bamisaiye of Dexteritas Professional Corporation. I know I've sounded way better than this in the past, but hey, it's one of those Friday mornings, and I'm excited to be here as usual. This is Finance Friday coming to you live from Calgary, Alberta, and it's my time when I talk about all things personal finance enterprise. But right now, I'm doubling down on tax planning. Why? Because I believe that taxes are a key part of our life, a very key part of our financial plan. And if we do not have clarity as far as tax planning is concerned, then there's only so far that we can go. So, before I dive into week two of our 11-week wrap up of our tax planning for the year, I just wanted to shout out my friends at the Financial Empowerment Initiative and the work that they do, providing financial literacy education in the community, as well as the tax clinic that's ongoing. So, if you are of the modest income persuasion, i.e., your personal income or your family income is $50,000 or less, and you have not filed your tax returns for 24 or 23 or 2022, 2021, going as far back as you can think, for whatever reason, we really don't care the reason, and you need support getting those tax returns filed, my friends at the Financial Empowerment Initiative Network are more than happy to support you to do that. And how do you get to take advantage of this? Send an email to operations at thefei.ca, and somebody's going to respond to you to book an appointment. And then we'll have those tax returns prepared and filed with the CRA so that you can take advantage of the benefits that are available to you from the government of Canada. That's number one. Now, yesterday was Founders Lounge, right? Vibe Coding Live. That was beautiful. I want to shout out Henry Fimibama because he did an excellent job there yesterday, showing us all the things that we could do between ChatGPT and Lovable. And you can imagine how many tools out there that you can take an advantage of. Writing your PRDs in either Claude or ChatGPT or Gemini or any of the text-based platforms, and then taking that stuff into Lovable or Base 44 or Replit or myriad of them, and then building stuff. And the opportunities that are available are amazing. It was excellent to watch Henry last night. Now, I know that we did not see the final product yesterday. I did. And we're going to host that on a subdomain and share with everybody in the community so that you can take a look and see what you can actually do, what you can create with these platforms. There's so much opportunity. There's so much we can do. So, Founders Lounge was beautiful. I had an excellent time. I believe everybody that was present there had an excellent time. I want to especially thank Dr. Charles Osuji for showing up yesterday and just gracing the event with his presence. That was a good one. We had an amazing time there, and I will share all the goodies that Henry promised, the sample prompts, the subdomain that way you can see what we came up with yesterday, and as well as a few other things that he has decided that we can share with the community as a whole, so that we can get these vibe coding juices flowing. Right, that was an excellent time, and I'm really excited at what the future holds. So that's that with the FEI and Startup Court. What are we talking about today? Well, it's tax planning, definitely. And last week, I did a quick wrap, just went over why we need to take advantage of Q4. Um, and we looked over, the fact that you have clarity as far as your income is concerned. There's some consistency there. You have a fair idea of what's going to happen over the rest of the last quarter. So there's an opportunity to review and recalibrate. So this week we are looking into what does it mean to review and recalibrate. I want to draw your attention to the fact that what is not measured, right? You can't correct it, you can't manage it, you can't fix it. And for free, waiting till March or April to understand your tax position is one of the greatest disservices that you can do to yourself. So, what am I recommending? You've got enough data as far as 2025 is concerned, so you can start to look at it and predict your outcome. Take action that gives you an idea that helps you ensure that you get the result that you are desiring. So, what does it mean to understand what your tax position is? Right? If you're an employee, every pay period you get a pay slip. Your pay slip shows you how much you have earned from that employment. It shows you how much has been deducted from your paycheck. It also shows you how much has been deducted in terms of taxes, CPP, EI, and any other type of deduction that you have requested your employer to make. Those are critical pieces of information. Now, if you are a business owner, my expectation is that you are reviewing your numbers at least on a quarterly basis, if not monthly. So if you have not reviewed your numbers 9 times out of 10 this year, my expectation is at least you've reviewed it 3 times, or you are going into your third review of your business numbers. That tells you how much you've made and how much you've spent, and what you are looking like as far as a tax position, a potential tax liability is concerned. So if you look at your pay slip and you can see that you have some good income, and you may be concerned whether the taxes deducted by your employer are sufficient, then you can take advantage of one of the platforms either Wealth Simple, or what do you call it, H&R Block, the online platforms, and just check out what your potential tax bill can be compared to what your employer has deducted based on the information on your T4s, on your payslip. Now, if you have a business incremental on that, or you own property where you earn rental income, then you know what the net result of those operations are, and you can include that in that return. What that does for you is you can say, okay, if I have made $100,000 and my employer has deducted $40,000, then I know that I've covered my tax bill for the year, and most likely I'm due for a refund. But if I've made $100,000 and my employer has only taken out $25,000, and you know that you still have about $20,000 in net rental income that's going to be added to that $100,000, then you know you are potentially looking at a tax bill. And because you don't want that tax bill to catch you unawares, you are able to, over the course of the next 2, 3, 4 months, prepare for that tax bill so that you can pay it comfortably in either March or April, and you do not have to worry about taxes. So that's what this review is about. Now, in addition to that, you're now going to be able to say to yourself, hey, if I owe on my tax bill without considering my RRSP contribution room, how much contribution room do I have? Now, hello, for the guys who enjoy employer matching, this is where it comes back to bite you. So if you have $10,000 contribution room in your RRSPs, and your employer has contributed $5,000 already, and you are in a 1-for-1 matching, that means that the most that you can put into that RRSP personally, which is deductible for taxes, is just $5,000. Understanding this is one way to ensure that you are aware of what your tax bill is, and you avoid any interest and penalties arising from over contribution to your RRSPs. Now, if you're a business owner, or you are in that position where it's clear that you are going to be owing taxes at the end of the year, if you are certain that that tax bill will be way in excess of $3,000, then you are able to begin to make installment payments. Installment payments ensure that the CRA does not charge you interest and penalties for not paying in advance. So the CRA expects you to owe no more than a maximum of $3,000 at the end of the calendar year, i.e. December 31. So if you are owing them in excess of that, there will be interest and penalties for that excess because you have not paid installmentally in advance. So far so good. I guess you're understanding what I'm saying right now. So this is my perspective. If you're going to estimate your tax bill based on everything I've said so far, that's one way to look at it. Another way to look at it is to look at your tax return from last year and compare the numbers there with the numbers in this year's tax return. On the back of that, you'll be able to say, oh, okay, I made more money. My employer has contributed more to my taxes paid, so therefore I should still be in a good position. Otherwise, it would be that, hey, I have made about the same money and I am fine. We're even Steven, no problem. So that done, you are able to clearly say, this is where my shortfalls are, or this is where I've paid in advance, or this is where I am going to potentially be owing. And you can flex how your RRSP contributions, charitable donations, and any other credits or deductions that you have can impact you. So in addition to this, you're also going to be able to say, okay, do I want to take an additional salary from my business? Or do I want to take a dividend? Or do I want to skip that completely because my personal tax bill is so high? Those are all critical things that this process I'm describing is going to give you sufficient information to take action with regards to them. Having said all this, just in case you're still wondering, hey, I really don't know what you're talking about, Doctor. I don't get this. Well, you can hit me up, discoverycall.dexteritas.ca. Let's have a conversation about how we can support you through this process. And if you're ready to get this done, then book an appointment through taxplanning.dexteritas.ca and let's have a proper conversation with all of the necessary inputs so that we can ensure that you are in a position that is as sound as you possibly can be by the time we get to March or April next year. Next week, we're gonna take this a step further, and we're gonna look at the considerations on how to pay yourself first, whether it's through a salary or a dividend or any other options that may exist. I'm excited to bring you this information and to support you. This is an amazing Friday morning, and that's pretty much all I got as far as tax planning is concerned. I will say to you, like I said earlier, what we don't measure, we can't manage. What we don't understand, we cannot take action on. I have brought this information to you so that you can take action on it, right? This is an amazing day, and let's go be amazing. That's pretty much all I got, and it's Friday morning, so bye for now.